Hi everyone, welcome to this week's market forecast for the week ending March 5th, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the euro, the pound, the Australian dollar, as well as gold, and we're going to wrap things up with Bitcoin or BTCUSD. We saw a lot of big pullbacks last week, and gold is taking its time finding a bottom, but I'm going to show you a key level there that has to hold in order for the uptrend to stay intact. And Bitcoin has been pulling back recently, but I'll show you a key level there that I'm watching in order for it to find a true bottom. All right, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up, we have the EURUSD, and this market has been sending a lot of mixed signals lately. So if you've been paying attention, you know that we have this inverse head and shoulders, or at least that we did have this inverse head and shoulders that formed after the false break below 120. All right, so this was 120. It was a previous range top. We got this close below it, immediate retest, and this ended up being a false break. So you can see where if we draw the neckline here, all right, you can see where we got a breakout or what appeared to be a breakout on this candle last week. However, that candle was also a big bearish rejection candle from this 122 area. All right, so this region right here, I mentioned it last week, did attract selling pressure and we got a bearish pin bar. All right, so basically this inverse head and shoulders pattern failed. And you can also see now where we have this ascending channel that's formed over the last couple of weeks. All right, so basically the bottom line is that the EURUSD has been very difficult to figure out. Based on this pattern right here, I would say if we do see a close below here and a retest of 120, it does look like the EURUSD wants to break below 120 and head for some of these highs back here and also these lows. So I would say if we do get a close, another close below 120, we can look toward the 118 area, this area down here based on these highs and lows as a potential target. That said, I'm not going to be trading the euro just because it has been so choppy and indecisive through here. It looked like we had a bottoming pattern and now it looks like we have a bearish continuation pattern. So it's been difficult to figure out, and I don't like trading a market that is this indecisive. Next up is the pound, and we can see where we have this nice uptrend that's been in place now for several months. However, this ascending channel, it appears like the pair broke inside of this last week after testing that 142.40 area. All right, so you can see where we broke back inside of this area and the pair is now retesting 139, which was resistance back here, should serve as support now. However, if this was a false break last week above the top of this channel, that could trigger an extended move lower. So if we do see a break below 139, in other words, a daily close below it, that could expose the 137.40 area. Notice how it was resistance back here, so it should serve as support. We could even see a retest of this ascending channel support, and there's no guarantee that this will hold or 137.40 will hold, because if this was a false break and we do see an extended move lower, there's a good chance that this ascending channel ends up breaking lower as well. So we'll have to wait and see how this plays out, but right now the pound looks pretty bearish, and we could see that break below 139 as soon as today, if not tomorrow, for a move down toward that 137.40 area. Similar to the other pairs we've looked at so far, the Australian dollar had a big sell-off last week and broke below that 78 area. So this was previously resistance following the breakout from this bull flag pattern. Now, even though it looks like this failed, we did get a nice run up from the breakout here. The Australian dollar went all the way above this 79.30 region. However, you can see last Thursday, we did get a bearish engulfing candle, and that sent the pair lower to retest this area as support. All right, so going forward, the 78 area is going to be resistance once again. So this region right through here is going to be resistance, and support comes in just below 77. Okay, so this area right through here, as well as this horizontal area right around 76.40. If we do see the Australian dollar break below this area, we could see a run at 75. This was a key horizontal level, and it's also going to be the intersection of this descending channel. All right, so we'll see how things play out, but last week's sell-off does look pretty bearish. We could see a move higher over the next day or two up toward this 78 area, But again, that is going to be resistance And if we do see a rejection from there, we could very well see the pair return toward 76.40. So gold, or XAUUSD, has really struggled in recent months. We've talked about this at length, how we had the March sell-off back here, and we had this nice run-up over a few months, all the way up here toward $2,075. Now, since that time, we've had a pullback into a descending channel. And at first, this looked like a bull flag pattern, but it's getting to the point where this has to start playing out. Otherwise, this could be a broader downtrend. And what I mean by that is if we look at the 50% retracement of this range, okay, you can see where we're breaking below the 50% level, which is right here, right around 1760. Okay, so this was support. Last week closed below it, and you can see where this area is serving as resistance right now. So the pair has to hold above this next area right around 1680. Okay, this is a confluence of support. It's the 61.8% fib. It's also a key horizontal level. Look at how it served as resistance back here, and then support. And it's also the bottom of that descending channel. So there's a lot going on right around that 1680 area. So this is going to be one to watch this week. I do think we'll see some type of bounce from here. Whether or not we just move back toward this area and then lower again is obviously up to the market. But this area down here has to hold. If we start to break below 1680, that would be very bearish for gold, and we could be headed much lower. All right, so 1680 has to hold that support. Resistance again is right around 1760. If gold can get above this area on a daily closing basis, we could see another run at that channel resistance somewhere just above the $1,800 area. So Bitcoin had a big reversal recently off of this high just below $60,000. And of course, we know that the cryptocurrency has been in an uptrend ever since breaking out above that $20,000 area. But I was actually talking about this all the way last year when it was trading right around $7,000. I was accumulating through this area, and I still hold it today. But more recently, looking short term, all right, there is a chance that this Sunday low could hold as this correction low. We saw something similar back here, and I talked about this in my recent crypto newsletter, where this move right here looks very similar to this one, and this correction right here was just over 30%. So far, that pretty much matches what we've seen right here. I did think there was a chance we could get a $41,000 retest, but that of course does look less likely now that we're getting today's bounce. All right, so there's no guarantee that this correction is over, because notice back here, we had a lot of bounces along the way before Bitcoin finally took off. Now this correction could be shorter, but if it's not, we could see a move higher followed by another move lower, but I would like to see a higher low get put in place if we do see that move above $49,000. Now, speaking of that, okay, today, $49,000 is going to be critical. So this was the closing price of this candle right here. You can see where before that it did serve as resistance for several days. It was support through this area, and Bitcoin then closed below it. So $49,000 is going to be critical today. You can see where it's moving above it right now. However, the daily close is going to be key, and that happens at 7 p.m. Eastern. So we still have a lot of time between now and then. So we'll see how this plays out. If we do get a daily close above $49,000, I do think that would give Bitcoin room to move higher, perhaps up here toward this area just above $50,000, and perhaps even up toward the $55,000 area before we see another pullback. But again, if we do see a break above 49 and a move up here toward 51 or even 55, and we get another pullback, I want to see a higher low, all right, compared to this one. I don't want to see us go up like this and then come down and take out this recent low, because that would tell me that Bitcoin could move below this trend line and perhaps even below that $41,000 area. Now, if that were to happen, I'd be looking toward the $35,000 area. That's going to be the next key support area. But as of right now, today looks pretty strong. We'll see if it holds up into the daily close. But even if it doesn't, guys, the uptrend is very much intact. Even if we saw a retest of $35,000, which I don't think is very likely at this point, if that were to happen, the uptrend is still very much intact. And I do expect Bitcoin to be even higher than $60,000, even higher than $100,000 by later this year. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.